Bitcoin hitting its highest levels since May, ahead of El Salvador's official adoption of Bitcoin as legal currency. That starts today.
El Salvador has become the country to watch in the evolution of Bitcoin, first making it legal tender, now taking extraordinary steps to address mining's energy usage problem.
So El Salvador is not going to have that problem this time, and we think other emerging markets. And we think crypto prices, a new asset class, will continue to move up. It's very interesting to watch El Salvador. El Salvador has deemed Bitcoin legal tender, and its president tweets almost every day about this initiative. So far, 2.7 million out of the roughly 4 million eligible have downloaded their Chivo wallets with $30 worth of Bitcoin in it. What's interesting about that 2.7 million is only 1.2 million people in this country of 6 or 7 million people have checking accounts. Here's another example of DeFi. Not even letting banks penetrate that highly into a country like El Salvador. It's also interesting to learn that today or in this week sometime, the government started mining Bitcoin using energy from its volcano. And we're wondering if they're going to actually include Bitcoin in their reserves, which we think would be a very smart thing to do. And the reason it would be smart is we're beginning to see the dollar's strength hitting emerging markets. A lot of emerging markets have dollar-denominated debt. So when the dollar goes up, it takes that much more to service the debt. From converting from their currencies into dollars. This is often a harbinger of risk increasing in emerging markets. There will be runs on the currency. So El Salvador is not going to have that problem this time. Many people wonder, why are we positive on crypto, especially Bitcoin, which is mathematically metered to top out at 21 million units. We're somewhere between 18.5 and 19, I think now. Yes, that's if there were an inflation, that's a beautiful hedge. When you're talking about emerging markets or you're talking about a situation like 08, 09 here in the United States, when there's a crisis, counterparty risk is high and rising. So to have a backstop like Bitcoin, we think is an excellent insurance policy. There are log jams all over the place in Washington, whether we're talking about the debt ceiling. No, we're not going to shut the government down. They play this game almost every year. I think the cash is there until October 18th. Maybe a little longer than that. So it's going to be an interesting couple of weeks, but we think they'll get the job done. They have no choice but to get it done. The infrastructure bill and the $3.5 trillion bill, social infrastructure bill as it's called, those are also stuck in gridlock, very interestingly. Not just the gridlock between Democrats and Republicans, of course, but the gridlock that appears to be evolving between the progressive and moderate Democrats in the House. So as we have been expecting, with midterms roughly a year away, but the campaigns beginning now, we would be very surprised to see much in the way of serious tax increases go through. We thought for a time that perhaps there was some momentum building behind some of these tax increases, but that has stopped, it seems. And one of the reasons is polling of the swing states would suggest that those voters do not want their taxes to go up in the way that Congress is proposing. And I think that is going to matter. So that's good news for the stock market, actually. Monetary policy, the growth rate in M2 peaked at 27% earlier this year and has dropped to 13.4%. Last month was a little lower, but low teens now. So the big question about monetary policy is, when are they going to taper? Meaning, when will they stop quantitative easing, just buying bonds? We are beginning to see the banks worrying about loan growth because of DeFi, decentralized finance, and the crypto world. And we do believe there is a lot of reason to worry. Regulators are going to insinuate themselves into that process, of course, and we'll see what happens. But DeFi is flying. Just to give you a sense of that, last year around this time, there was less than $10 billion locked in DeFi on the Ethereum network. Today, that is $120 billion. So at the margin, that is making a difference for the banks. We believe that the next big worry is going to be recession. We don't necessarily believe there will be one, but if we're right on what's going on out there, and inventories are starting to build up. We've been saying for some time that the inventories in the system are much, much higher than I think most people appreciate. But where are they if they're not in the auto dealer lots? Well, they're in our garages and in our driveways. Everyone knows the familiar story of stocking up on paper goods. We're not going to have to buy them for quite some time. So a lot of inventories are in households. We believe that, and if we're right, we're probably going to be seeing some surprising stories about inventories out there at stores piling up. Because we do believe that there has been a lot of double and triple ordering. And now that the consumer is shifting away from goods at the margin to services for obvious reasons, we're vaccinated, we're out and about now. We're beginning to get some rumblings of this. This week, Kohl's and Bed Bath and Beyond were hit hard. And I do believe that, and one of the reasons were downgrades. I think analysts are beginning to sniff out this excess inventory and the loss of demand as consumers move from goods at the margin, of course, to services. We also think there's another fear brewing out there, and it's China. Now, we hear a lot of headlines about China, but I'm not seeing many economists even integrate what's going on in China into their forecasts. China has been a powerful growth engine for the global economy for the last really 20 years. And they are changing their spots. Growth does not seem to be China's primary objective anymore. Common prosperity does. And they are restructuring in many ways. I think that's going to slow things down quite a bit, their economy. And of course, China has an impact not only on the rest of Asia, but especially Europe. I think Europe and China are much bigger trading partners than China and the US. Nonetheless, commodities are global. And so what hits China and these other economies is going to impact pricing. In fact, we're already seeing that, and I'll get into that in a moment. But let's talk about what the market's really worried about and why the impact has been so severe on fast-growing companies with high valuations, at least high valuations if one is looking at this year or next year. Well, the market is really worried about inflation. And the headlines this week have been the highest rates we've seen in 38 to 40 years. And for some measures, that is true. I mean, the headline measures are concerning. I understand that. The PPI year over year is up 8.3%, CPI 5.3%. The personal consumption deflator up 4.3%. That last one is the one that the Fed pays a lot of attention to. So as you know, last year, we anticipated high inflation. It's a little higher than we thought, not much. One of the reasons was because of the base effect, the collapse in prices around the coronavirus last year. Well, we are passing through that, and still these numbers are high. So we do have to answer to that.